we've kind of talked about the big themes this morning. We've talked about the economy, we've talked about banking, we've talked about real estate, we've talked about FDI, emerging middle class, which are really the drivers of the Vietnamese economy. And that really sets the stage for us right now to talk about the equity market. So I'm very pleased to be joined by Nguyen. Tu is our head of listed equities and fixed income. All of our local funds and our offshore mutual funds reporting to her. And by Linh, who is our head of research. So all of the equity analysts and sector analysts report to her. And so what we want to do in the next 45 minutes or so is really to basically say, what's the outlook for equities? Because ultimately, we have a diverse platform. Some people are here for alts and energy. Some people are here for equities. We want to make sure that as much as we touch on the economy, we touch on the view for the equity market. We talk about the themes we're looking at. We're talking about how we're actually looking at the opportunities. So with that, Linh, I'll start with you, which is the question. So the market's run up a little bit this year. It pulled back last week. But the question I think people have asked is, right now, is the market expensive? Is it cheap? Is it fairly valued?
Look at this chart. The current valuations is cheap as 9.6 times PE forward if we look at 2024. And compared to historical PE and PB level in the past 10 years, there are only 3 times the market reaching around this low level. This is another way to look at how attractive the stock market is to look at the spread between the earning yields of the VN index and the 12-month deposit rates. The earnings yield right now is at about 11%, and the deposit rate has come down significantly after 4 rate cuts this year to about 5.5%. The gap between the two rates is right now is about 5 to 6%. Normally, the gap between 3 to 4% is considered as very attractive for people to invest in the stock market. And compared to other 5 ASEAN stock markets, Vietnam is attractive on absolute basis, even though the fundamentals are really good in the next few years because of various factors. The stock markets in Vietnam is trading at a deep discount compared to its regional peer. Right now, the discount is at a 10-year high. So all of above reasons, Vietnam right now is probably trading as one of its most attractive level in the past decade.
Thank you, Linh. Now, it's good that the market's cheap, but most people invest in Vietnam for growth. So, Tu, what do earnings growth look like?
Yes, growth is absolutely important. And growth this year, however, is not going to be very positive because we are facing so many economic headwinds, as you must have heard from Mike earlier in the day. We are seeing exports slow down, consumer sentiment slow down, and so our forecast for 2023 earnings is just about flattish because although we have good earnings coming out from IT sector at 23% and banks at 12%, but that's only sufficient to offset the negative earnings growth from sectors like real estate, consumers, and materials. And therefore, but the good thing is that we are looking at this chart, which is a quarterly earnings chart that we've rebased to pre-COVID level. You can see that the recovery trend is quite obvious, and the bottom has been established as of Q4 last year. So the sectors are on the right track of recovery with financials and technology leading the recovery, and all other sectors are already reaching the pre-COVID level in terms of earnings. We are forecasting second half earnings would be positive and would be very healthy versus the first half as well as the second half of last year. So it further confirms our point that the worst is really behind us and gives us reason to be optimistic about 2024's earning. On 2024's earning, which is of course of more importance to us now that we're already close to end of 23, we are forecasting 25% earnings growth for the market based on our coverage universe, which is about 93% of the market. Also looking across ASEAN, we have the best growth that you can find anywhere in ASEAN. At this level of growth, we are much higher than all the other 5 ASEAN countries.
Now, thank you. So one of the things that we talked about earlier is that Vietnam was actually ahead of most countries in terms of decoupling from the U.S. U.S. is still raising rates. Vietnam still lowered rates by about 150 basis points. As Michael said, that drove money to the market. So Linh, do you think the market can still move forward if rates don't go any lower?
Agree with Michael that policy rates are unlikely to go down further from here. Having said that, the earning outlooks is very attractive next year, and the market valuation looking forward is cheap. We think the markets can go up further. Do not need additional rate cut to move up further.
Excellent. And so, what sectors look attractive to you next year and beyond?
We're bottom-up stock pickers who are also index agnostic, so we don't normally think in the vein of which sectors to overweight or underweight. We think more about which stocks to put in our portfolio and at which weight. But to answer your question, we do care about macro, and in our macro analysis, as well as when we apply the macro overlay to our bottom-up stock pick, we do come up with investment themes. And the investment themes for 2024 to us would include digital transformation. This is a theme, a multi-year theme that we've liked for a couple of years. The companies in the sector are doing very well because they are enjoying massive tailwinds both at home and abroad. Companies like FPT, for instance, see their software export growth at level of 20% and beyond. We also like the beneficiaries of a benign interest rate environment. So while no policy rate cuts are predicted by our macro team, we think that the benefit of the 4 recent rate cuts are still trickling into the economy in the form of lower funding costs for the banks, and therefore lower lending rates to companies that need to borrow money. And on this theme, we like the banks, the brokerage houses, and industrial parks. We also believe in a recovery in domestic demand on the back of the recovery of global demand for our goods. So on this theme, we like the retailers for domestic demand, and we like the port operators and select exporters, for the global demand. And last but not least, we also like oil and gas, because at this current level of oil price, and also because the government is pushing for some very major oil projects, it makes a very good case for oil and gas companies.
Excellent. And so as you think about, 2024, we've talked about the future looks great, but is it really about, is Vietnam a beta opportunity or is it an alpha opportunity?
Interesting that you could ask that question. To us, Vietnam has always been an alpha market because there is so much opportunity to pick stocks here and create alpha from bottom-up research. And we are confident that we can do that because out of the universe of 1,700 listed companies, eventually only 25 or 30 stocks make their way to our portfolio through our very rigorous investment process. And you can understand this more, looking at the makeup of the market. The market of 1,700 companies, there are only 18 companies that are large cap, over $3 billion market cap, and 64 companies that are mid cap. And an average broker, or maybe even a good broker here, covers between 60 to 80 stocks. So they barely make their way through the mid caps, let alone the small cap companies. And in the past years, we've been creating a lot of alpha from the small to mid cap space through our active approach as well as our bottom-up research. Another point to make is that anywhere you look, in the market, if you look at the market as a whole, there can always be areas where you find more opportunities than other areas. Take this slide for an example. It's about sector valuation. At the moment, as Linh pointed out, the market as a whole is trading at very attractive valuation. And we could make a case as well that most sectors are trading very attractively. But obviously, there are sectors that are cheaper than others. Take a look at the banks or energy companies, even consumer companies. They're all trading at more than one standard deviation below their 5-year mean. Another point to make about our alpha creation process is that we have this very rigorous research, bottom-up research, where we leverage our strong resources within the company. The listed equity team comprises of 24 people, including research and investment team ourselves. We also draw on our various expertise teams within VinaCapital for valuable industry insight. We place a strong emphasis on company visits because we think that management quality is key in our decision making, and we would not make an investment unless and until we've met the company.
How much so as we think about this, one of the things we always talk about, and hopefully the reason everyone came here, was to hear about how we can do this, because if you're not sitting in Vietnam, is the chart that we have behind us, could people outside of Vietnam do this?
Of course, they can still do it, but with a lot more difficulty than we face, because we have all of our team members, 24 people that work on analyzing equity opportunities for you. We are local people, and we speak the language, we understand the business culture. We run around and visit 400 companies a year for you. And we have all of our in-house models built up for all the companies in our investment universe. We visit these companies that we have in our investment universe at least 4 times a year, and are kept abreast of information or development on that company as well as industry. We also place a strong emphasis on channel checks as well. We don't just take the management word for it, but what I mean is that, just besides talking to management team, we also talk to the stakeholders of the company or even employees of companies within various departments, sales department or finance department, for instance. And also we have our ESG rating, again, is our in-house process, 200 questionnaire that take us through the assessment of a company's performance in terms of ESG. So I think all of that, of course, is achievable, but you need to spend a lot of resources. And just to give an example on the depth of our research, this is what we call like a BMI scan of companies. This is a very initial stage of our screening process where we assess the companies based on their business model resiliency, the management quality, and the industry outlook. To have a BMI score for one company, we'll have to answer about 50 questions, both qualitative and quantitative. For instance, on business model, we'll be looking at whether the business is scalable, whether it has strong bargaining power with suppliers and with customers. On industry outlook, we ask questions like, what is the size of the industry, what is the growth, whether it's concentrated or fragmented. On management quality, we look at, of course, the expertise level, but also the stability of the management team and the integrity. Whether we can trust the management or not. And these 3 steps do not include growth and valuation yet, but once we put together the portfolio and we plot our portfolio holdings, which are denoted by the red dots, against the broader investment universe, you can see here quite clearly that we've captured the better companies. The red dots are all over the upper right quadrant of the chart, which shows that we do our rigorous research process does result in the right outcome.
Now, as you think about it, and I think it's important, because one of the things that we wanted to do was not only show the depth and breadth of the research, but really increase the level of transparency. And so as you look at this chart, the naive assumption would be like, okay, the number 1 holdings would be VCB and GAS and TCB and VCB and ACB because they're the far right. But you know what? I know that for most of our portfolios, not all, but most, it's FPT. So walk us through maybe why FPT is one of your favorites.
FPT has been our favorite for 9-10 years. And the reason is because the company has demonstrated very strong resiliency. The management team has vision and has very good execution capabilities. As you can see here, not only is the company growing very rapidly in terms of revenue, and profit. I think net profit CAGR growth is 20% over a long period. Not only that, but also net profit and ROE is improving year by year. So we're talking about ROE at this level of 27, 28%, and net profit is also improving very fast. We also like the fact that the company has very strong corporate governance. It is probably the only, if not, maybe one of the rare cases of companies where actually the chairman does not take ESOP shares. He gives it all to the succession team, who are younger people but have been with the company since day one. And they are managing the company very well to scale new heights every day. It's probably the only company with an ESOP program that has a vesting period of 10 years. So it really emphasizes the loyalty and also the resiliency, the sustainability of the business. And that aligns very well with our value, and therefore we like this business very much. I also want to point out some of the aspects about FPT that is probably not as much talked about as their software and telecom business. Semiconductor is a new opportunity for Vietnam. But before that, Vietnam is already on the map in terms of semiconductor production and exports, because in 2020, we had an export value of 4.2 billion. And FPT actually had this business since 2014. They have the ambition of listing the stock of FPT Semiconductors by 2027. Last year, they produced their first designed chip. So we think that they have ambition and they have the execution capabilities, as I spoke to earlier. So we believe in their success in this space. But also FPT Education has become increasingly more attractive. It started more than 15 years ago and contributed only about 3% profit then. But today it contributes about 21% profit to FPT. So it has really become a cash cow for the company. And who better to capture the growth of the semiconductor through education service than FPT, because they already have a very established university, FPT's university brand. So that's the reason why we like this stock already for 9-10 years, but also for the next 10 years.
And so I'll just make one comment. So I was actually in Hanoi last week with some folks from FPT, with a group from Taiwan that was talking about partnering with semiconductors. And so kind of behind the scenes, and this was set up even before the enhanced partnership with the US, is that the companies from Taiwan are already coming over to talk with FPT about partnering with semiconductors. So this is kind of well underway, which is terrific.
Can I also ask Linh to share an example of a small or mid-cap companies to you, because that's the area where we've created a lot of alpha.
Mr. already mentioned earlier that industrial parks is one of our potential theme for next year. So we talk a little bit about IDECO. One of the milestones for us to look at these companies is that the company has now completely become a private company after the government fully divested 36% stake about 3 years ago. After the divestment, their return on equity increased from 12% to 40%, more than 3 times higher. For an industrial parks developers, the size of the land bank and the quality of the land banks are the key. And for the size of the land bank, IDC right now is having the biggest land banks among the listed industrial park developers in Vietnam, with 600 hectares of existing land bank and 2,000 hectares of potential land bank. So in terms of the location, most of their land banks is located in Long An area, province, which is considered as a very prime in the south of Vietnam, only after Ho Chi Minh City. And in Bắc Ninh, in the north of Vietnam, it is considered as prime location only after Hanoi in the north. They attract most of the major big MNC like Hyosung from Korea, Heineken, Pepsi, and Lock and Lock, etc. So for the reason for us to call for these stocks, number one, size and quality of the land bank. Second, they have much better profitability compared to peers. Third, their earnings visibility is very strong. We predict their pre-sales number to grow at least 40% in the next 3 years. And dividend yields, they can pay up to 8 to 9% dividend yield per year given the strong cash flow and also on the healthy balance sheet. And last but not least, the valuation. Right now, we think they have a potential upside of about 20% based on their current land bank. To add their potential land bank, the potential upside could go to 50%.
Well, and according to Hui, that the land bank is the most important thing in terms of evaluating a real estate company. So I guess it's the same for industrial parks as it would be for residential. So, we've talked about lots of things that are fantastic. Investing is not without risk. And so how do you think about risk as the head of research? And then two, how do you manage it? So we'll start with you, Linh.
Nothing is coming up rosy, of course. So we should be mindful of the potential risk of the market, and we criteria group risk into three types of risk: exogenous risk, which include deeper global economic slowdown, and Fed's longer, higher for longer interest rate and geopolitical tensions. On the domestic risk, country risk include corporate bonds overhang, risk of real estate market recovery slower than expected, and higher inflation, FX risk, which we mentioned in earlier sections. Market risk is include high participant of retail investor, and also the delays in the potential implementation of the trading system, KRX.
So two, those are the risks that I think we all know about. How do you manage those as you think about, so you manage, we've got offshore funds, we've got local funds, segregated accounts, ILPs. How do you put all that together?
Right. So risk management, as you can see from the slide behind me, is a very essential part of our investment process. And it actually exhibits through all the steps within the investment process, but I mean, not just itself, but through stock selection as well as portfolio construction. We always have this risk management mindset at the back of our mind when we make decisions for which stock to put in the portfolio and and at which weight. I think, for an example, the stocks that we like has to have the qualities in terms of fundamentals, the kind of growth that we are attracted to. But at the same time, as I said earlier, we also assess the management, whether the management has the risk management mindset that aligns with our values as well. So in our bottom-up stock picks, we choose companies that are multi-year winners that can provide us with sustainable growth and reliable growth. And also through portfolio construction, we decide which weight to give to each stock, based on not only the quality of the stock, the investment thesis of each stock, but also how high our conviction is in the management's ability to deliver and consistently deliver this growth year after year. And then once the stock is in our portfolio, we monitor the stock, of course, all the time, right? And we do this through having lots of meetings and update meetings with the companies throughout the year. We also monitor the stock on a top-down basis, meaning that we make sure there are no macro or sector headwinds that go undetected throughout our holding of a stock. And then also we have a lot of stress testing and sensitivity analysis in order to make sure that our forecast and valuations of each stock is robust and reliable for our decision making. We also have, besides the portfolio management team, we also have an independent portfolio risk team that helps us monitor the risks of the portfolio. And an example is the snapshot of our risk report, which basically covers all the areas of portfolio risk that one should pay attention to. Things like VAR analysis, value at risk analysis, liquidity analysis, our ESG monitoring of the portfolio companies, and also we pay attention to the correlation of stocks within the portfolio to make sure that the diversification effect is optimal in order to deliver the best risk-adjusted return for the portfolio. And this is the reason why we were able to generate over 12% of alpha in a period like 2022, where there was very large drawdown. I mean, the stock market went down I mean, Vietnam was probably the worst performing market in Asia because of so many things that happened. But we managed to outperform that drawdown by about 12%.
And I think it's important. I've obviously worked at other asset management firms, and I think what I've really appreciated about being here is that, think about it, risk management as part of a culture, or it's not. And it's not something that you do at the end when you build a portfolio to say, am I doing this? It's are we thinking every step along the way about not taking risks, but are we aware of the risks we're taking? Are we comfortable with the risks that we're taking? And ultimately, how do we manage that to its full effect and for all of our portfolios? So, all right, with that concludes kind of the prepared Q&A. We have still about 15 minutes for questions, but since you guys have been a shy audience, I will start with one myself, but I would encourage you to raise your hands. I got this one this morning, so it's kind of somewhere in between. We've somehow gone until 12:25 in the morning and no one asked about the EM upgrade, so I'll ask about it. Two, you actually just visited Hong Kong with Madam Fung, the chairwoman of the SSC, and their, I guess, mission, for lack of a better term, was to meet with regulators, with institutional investors. What was the catalyst for that trip, and what do you think the outcome will be in terms of a potential upgrade?
The catalyst for that trip was because the chair lady of the SSC was given a mandate from the Prime Minister to get Vietnam upgraded to the emerging markets as soon as possible. And so the SSC team saw the need to be in Hong Kong to meet with all the parties that you mentioned, but also the rating agencies themselves, MSCI and FTSE Russell, in order to discuss what Vietnam has to do in order to get into their EM list. And the outcome of that trip was positive, in my view, on several levels. First of all, it's the first time that I've observed that the regulators are this enthusiastic and felt the pressing need of doing the right thing to get Vietnam to be upgraded. Also, the level of political commitment is really high.
So for the cynics in the room who've come to either our conference or have been following Vietnam for a decade, who've said, I've heard something like this before, do you think, this is always the scary thing, quote, this time is different. Do you think this time is different?
Yes, it's different in the sense that I think with FTSE, Vietnam has been in the watch list. And if Vietnam does not do anything, we could be out of the watch list, and that's going to be very negative. So the regulator is aware of that, and they are also aware of the fact that for FTSE, the biggest hurdle is the pre-funding requirement. And according to the discussion that I was part of in Hong Kong, we saw that the pre-funding requirement could actually be resolved with the implementation of the new trading system for the Vietnam exchange, meaning all three exchanges combined. And that is expected to be end of this year. So even though there may be some minor delays, the market is talking about some minor delays, we think that it would happen either end of this year or early next year. And once the new trading system is live, we have reasons to believe that the pre-funding requirements could be removed, and therefore Vietnam could be upgraded to EM by FTSE within next year, as early as next year.
And I think that's what, so many people are so focused on the FOL issue that gets the headline, is it maybe more that for at least FTSE, it's the pre-refunding issue, and then maybe for MSCI, would it be the FOL issue?
Yes, that's correct. For MSCI, the FOL issue is more pressing. I mean, they give a lot of pressure to the regulator to resolve it. There's both good news and bad news. The bad news is that it's still very challenging, but the good news is that the SSC immediately have their short-term and long-term solution for that. So the short-term solution is that there will be certain amendments to some current regulations to require companies, especially companies that are outside of the strategic sector, to remove FOL, and for all companies to publish their FOL online, so that all investors can easily see that information. The longer-term solution would be either to consider to shorten the list of the strategic sectors, or to adopt NVDR or a foreign board, for instance, in order to remove this FOL issue. But maybe I want to speak to another point, which is that IFRS is going to be adopted. The mandate is that it has to be adopted by 2025. And it shows, again, commitment from the government to improve governance, improve reporting standards, so foreign investors have fewer barriers, fewer challenges when accessing the Vietnam market. With IFRS being adopted, we believe that many investors would find it easier to compare Vietnam across with other companies in the region, and therefore it's easier for them to make the off-benchmark weight, even in the case that the upgrade is taking its time.
Well, and I think what we've heard this morning from Paul, he made a point that for private equity investors, Vietnam is already emerging, and it's only for public equity investors who are kind of constrained by MSCI. So hopefully people will look at this as another opportunity. All right, so let's see if there are some questions from the audience about the equity market. Okay, there's one.
Yes, today in Europe, more than 50% of the investors are investing allowing to ESG criteria. And the best ESG stocks represent, 20% of the capitalization. So they are overpriced by definition. Do you see the same bias in Vietnamese markets?
We don't have that same bias, just because I think Vietnam is still by and large an inefficient market. So we find opportunities to access companies that are both better than the market average while trading at lower valuations. It might come as a surprise to you, but our portfolio actually has almost double the growth of the average of the market, while trading at about 15% lower valuation to the market average.
I think the other comment I'd say is people here are actually very interested in ESG and sustainability, as we heard on the FDI panel, and we've heard in other panels, and we'll hear it this afternoon. But investors don't necessarily place a premium on that. And so a company may have good practices, and that may actually enhance its brand for consumers. It may enhance its brand for employees, but investors have yet to pay up for that. So I think that's probably a likely scenario if Vietnam follows other markets, but that certainly hasn't been a good ESG score, higher multiple just yet. Any other questions? Okay. Well, in that case, is this door coming down, Tom? Lunch? Is that coming down? Okay. Okay. So if what we could do is we will, first of all, thank Tu and Linh. Thank you very much for your time.